We're seeing futures lower today, Douglas, and it looks like there is some tempering of expectations for when the Fed might cut. What do you expect from the markets in the next month or so before we get to that Fed meeting?
Sure, it's anyone's game here, but all eyes are on the Fed and their moves in terms of what we're going to see. The market's been rallying strong at the beginning of this year, and we're going to find out if we continue to head in that direction, despite the Fed
Uh,
perhaps scheduling their rate cuts till later this year.
Douglas, so give me a sense of CPI. That number comes in. It's not the Fed's preferred data point on inflation, but what are you expecting it to show, and how might that move the markets?
Yeah, I think it's going to be perhaps cooler than expected, if not as expected. That should flip these futures around just a little bit, but it's anyone's game here. We had December's number revised lower. Inflation seems to be getting under control for the most part, and we'll find out if that encourages the Fed to move their timetable up.
Okay, let's talk about the markets today. We are in the midst of earnings season, and we've seen some really magnificent ones. We're still seeing the Magnificent Seven fueling a large part of the sentiment and the growth that we're doing. We've had predictions of a broader rally. When are we going to see that?
Hopefully, we'll see that in the coming months, but perhaps we won't really see that until the Fed decides to lower interest rates, which might not happen until later this year. Equities are sure going to like that, but it has to be lowering rates because things are strong, not because we're seeing cracks in the system here. So that's why I have my eyes on the Fed, and really where my question lies is, why are we lowering rates? Is it because we managed to keep things higher longer, get inflation down, jobs remain strong, or is it because we're starting to see weakness in the overall market? One should bring in maybe more of a broader market rally, while the other might dampen stocks.
I see that you have a younger clientele. What are they interested in? How are you positioning them for the future?
Yeah, for the demographic of clients that I serve, the number one concern is always jobs, which has remained strong. Perhaps we're seeing some weakness in the tech sector, but they care about income coming in the door. And from an allocation point of view, they're long equities. They have time on their side. They're able to invest over a multi-decade period. On average, we'll find 80% of their portfolio in stocks and 20% in fixed income. And we think there might be some opportunities in fixed income this year, later on as Fed prepares to lower interest rates. So pretty aggressive stance by all measures, but based in mostly equity positions.